Hey, my friends, and welcome to the Breakfast Club. It's Thursday, the 19th of February, 2026. Welcome, welcome, welcome. Last 2 days of this week's trading. Let's see what we got here. All right. So I'm just looking for this to get above 869. I'd like to see that come down and give the 830 a nice little tap. That would have been right on the top of the breaker here. See that go higher. So we're really still inside this range here. Don't get the extension rule until we can get above here. Then we're reaching for the equal highs above us, and then we'll see after that. I do like the fact that we're using the 6 a.m. candle. We're through it, come back, tag it, and I want to see him run for these equal highs here. Well, it would be nice to see it run right for the midnight open right here. Let me turn my box off here. If we kind of look at what these setup would be like clearing out these highs. We've already cleared out the lows. Clear out the highs. If we're going to go higher, see it clear out the highs, dip all the way back down into that tag is 830 and send it higher. Because the lows have been swept, the highs just haven't been swept yet. Let's look for our 3 a.m. candles up here. That's above us, way above us. We have overlapping 3 a.m. candles. There's like 3 of them overlapping here now. We can get back up on top of those, find some support at that, and then start looking for a run to the next 3 a.m. candle. Up at 2,500, 25,000, that would be kind of nice. Hans, first through the door this morning. Good morning, Hans. And good morning, Abs. How are you guys doing this morning? A D gets the bronze medal this morning. Good morning, Hunt. Morning, Hadi. Doing good, D. Thanks for asking. Hope you're doing well as well. I am fine. How's the wife? How's your wife doing? You guys are feeling better? You're on track? I'm going to a risk-free trade here. I took a trade right off the 6 a.m. candle here. So I'm going to risk-free right now. I'm just sitting here at break even. And like I said, it's just come back and tag this. Oh, we've already done it right here. So to me, this is really unnecessary right now. We haven't really taken the highs yet. But we have hit the top of this premium box here. So we'll see what happens here. I really want to see this one continue accelerating here. Take out these equal highs. So see where we're sitting. Everyone's doing good. Oh, that's good to hear. Your son back from Spain. Is he lamenting Spain still? Or is he got busy, got down to working? Lucky, good morning. Hola, good morning. He's going back just to visit now for the spring. I bet he did. I bet he loved it out there. So far, it's leaving these intact. We're locked in here. So we could come back into here. Look for us to return back into here now. That would still keep you in here. Brings you back into that range. Retest this. I'm out of that trade already. I didn't like that second candle, so I'm out. All in one. Coming for here. We can get through here. Look for 830 again. I like to see us bounce off this 830 here. And then start targeting these. We've got equal highs here now, triple highs, and these equal highs here. So I'm watching right here to see what kind of reaction we get off that level. Right in the middle of the 6 o'clock. I want to see it touch the daily open. Regular trading hour gap close lower. Make it happen, D. I'd love to see it get back up in the air. That's 100 handles right there. Seven o'clock. Oh, 7 a.m. here. It's 9. 9 in New York. It's going to get busy now. Let's go. While that one's brewing, let's have a look at what's going on over here. We've had the lows taken here. We've had this SIBI filled. We've got equal highs above us. And we have a nice little reversal happening right here. And it's held in place beautifully here on the 5-minute for ES. So we saw this break up above, come back down, tagged it. Didn't like the wick through this, but can't be fussy. Okay. And then you want to see it leave from here. The fact that we came back down here, unnecessary. We've already come back, filled the whole thing already. So you wanted to see that just get back up on top of this candle, find some support at it, and continue pushing higher. The fact that we're just waffling around in here is a little suspect for me. That's for 5. What's a 1 minute up to? So we came all the way back down to this candle here, and notice how we got the same thing here in NQ, ES. Now we want to see this start to really march through this candle. Again, you've already ran up into the premium box here, discount box. So you don't want to see it running back through here. So we'll wait for Hadiz 830 here to get tagged. Let's see if we get a response off of that. Yeah, it looks like we may not get that. I want to see that come up there, clear that out first for the 9 o'clock open. We're already through this level, so this is coming lower right now. So using the 6 a.m. as support. See how you can trade above it, below it, above it, below it. We've got too many times we've been above and below the 6 a.m. now to use it as a support or resistance for me. So I'm just looking for that retap and run down to the 830 and then see what we get from it. This last little bull trap here. That would have been a nice little continuation right there to the premium box. That looks bearish to here. There's 830 tag. Now I want to see that start to leave here. That's the touch right there. Now I want to see this kind of start working its way back up and get through here. We're going to come for these equal highs. We're going to go lower. You got to lose the mean threshold of this candle. Come back, find the tag at the 830 here. Just need to get above here, that's all. There we go. Get up there, got to close up there, not just tag it, because this is a retest of this. So this is just a retest of this to go lower. And this is what I'm looking at right here. Let's get on top of this. And then start working our way through here again. This is a very small range, so you'd have to wait for this to break and that to break to start running higher. There's not a lot you can really grab to get on here if you're going higher. But if you're going lower, so far that's a retest. That's a nice Model 3 or no, Model 4 now continuation. But we're in the bottom of the range, so I'm not touching that. We're sitting right in the breaker, so you know, I could argue both directions for this, so that's why I'm not touching it. Wait for something cleaner. So after the fact, you can't just say, okay, well, we hit 830. It should have been a nice little long right there off of that. But because it took that low out, and that would be a target. So we'll see if that was a perfect target to see if we can get through here, find some support, take out that and say, yeah, you could have argued that in this direction if you're targeting the 830 and move to the sidelines. That would have been great. And then wait and see if you're saying, I'm waiting for that spot. As soon as it tags that, I'm leaving. And my stop loss will go right below the one tick below this low. That'd be a long as well. So you can literally argue both directions. So unless you're really confident in your trade setup, you can't really be 100% certain here. And if it goes to your direction, then my question is, where was your certainty? Other than the Model 4 that's going on here right now. That's what you're still playing. You've got to get through here now. And you're 50% of the range already. So if you're Model 4, you could get your Model 4 here for this. There, and it would have to be in that candle that you took your short above it in the premium. As soon as it takes out that low move to break even, and then you get a risk-free trade on for a short. Watch this mean threshold here now. This could still turn bullish on you right here. And if you're all going, screw that noise, I still want to get my, I'm heading for the rejection block, half the wick, the low, off the Model 4. I'm okay with that too. It's just late in the game for me. So if you're risk-free, you're risk-free. You got paid at the next low, which is a couple of bucks, so paid for your trade. Then you're risk-free, so you might be able to catch this on a really early continuation here. Your Mark III is bouncing around like hell inside this candle here. That would have been a nice little run from last night. And I went back in and checked it on the 1 minute candle, and it was just a delicious little run. I think it was, where was it, 3 a.m.? Yeah, right here. I trade through it, come back, tagged it. That would have been a nice little run this morning. But who's awake at 3:30? You must have left early, Mark. I want to add your name to this Mark III here inside the code. I want you to have the recognition for your setup there. So if you want to tell me what your last name is, just DM me. You don't have to put it on here, but just DM me your last name and I'll add it. There's a student manual that goes with it as well, explaining all these different, every one of these things in the setup or the settings, and then the HUD. And as you can see, we're at version 12. I think we're at version 14 or something like that now. There's some little minor things that are still annoying me about it. No trade right now. It's in an armed short, so there's not a... You've gone short. You've hit all your targets inside here, and now you're waiting. You've already armed it on the downside. You got to break through, come back, retest it, and then... oh, you don't want to lose the mean threshold or that, something like that. But you're in a... You're ready. It's ready for a new Mark III. You see how that's holding? Let's see it run for these. Watch this little retest right here. See how you can argue both directions? And the fact that we're coming back into this mean threshold again, we've tagged it already right here, sent it lower. Then you get this change in direction after taking out a low. We've got a nice little pop through it. Come back, give it a revisit right here. Right There. Small little bull candle, little bull trap there, ran through it. Haven't come back and tagged it yet. This is where you wanted to see a graded response. A little A-level trade right off the top of that. Institutional order flow entry drill, leave a portion open. This is just A+, where it just leaves and runs from here. It's a super small version of what we look for on all the other stuff. This is now active. I want to see that, find some support here and leave. Start using this 6 a.m. candle again as some support to get going a little higher. We can still come back and revisit this, but I want to see that leave. If it's really got some intentions of reaching up here, you're going to say tag this candle and send it higher. Tagging a little high. You want to come down here and give that a little poke. It says, no, I'm happy with the high. Fair enough. Away you go. Send it up there. Not quite at risk-free yet. I can get back above that little candle right there, I'll go risk-free. I'm in off this candle here. You want to see 9 o'clock run these out, or 9:30 run these candles out, and then start its big plummet down. But you want to see it just come running up and clear out the upside first. Preferably run to this midnight open candle. Mark just goes silent. You ask him a question and he just goes silent. Let's get up on top of this candle here now. We're sitting right inside this bull trap, so we're inside this range, bouncing off of a bull trap. So I'm going at break even, just I don't like the way that's acting, so come down here one more time. I'm gonna wait for something cleaner. You want to see that get out of here. You want to see some intention. See how there's just waffling around in here, right inside off the bull trap. Come back to the candles open. That's good. Send it higher. Got to get a candle above here now. See how we got this one? And then you're right in the bull trap and you're in the premium portion of this. So you got to wait for this to let go anyway. And then again for here. That's good. Got a body above the high, came back, tagged that bull trap, send it up now. Let's go. No waffling around here. 61. We've got another one of these situations happening down here now, right here. Remember we talked about this right here? Same thing right there. That little bull trap. I want to see that little bull trap get broken to the upside, create a fair value gap. This is what we got right here, doing the same thing here, but we didn't get a fair value gap above that. We just got the body. Then you want to see it tap. If it's aggressive, you want to see it leave from here and not come back and tag this again. Otherwise, we've got institutional order flow entry drill for a continuation to the upside, looking for the target at the mean threshold right here. So you see how I know there were some of you were calling this to go lower. You can't absolutely know it's going to go lower until you start looking at, there's multiple different PD arrays that it has to get through in order for you to confirm that it's definitely going lower. You don't know it's going lower until you see a specific, the last PD array that which should support going higher, get broken. So if you reach too many PD arrays away, you get this kind of thing happening to you. So that's a really nice, you look at that 830 now, look at the bodies respecting the 830. I'm risk-free in profit there. I'm sitting right here right now. If you look at the 15-second chart, I got in at 56 down here. Send it higher. And I'm sitting, my stop loss is sitting right there. So if it pops down one little pop, it'll take me out. That's it. Tag it and go. It's literally sitting right on top of me here. Yeah, you want to see that. If it gets back up on that, see how many times we try to get above that, the D? This is like the fifth time we've tried to get above that. 1, 2, 3. This is the fourth time we try to get above that. So we really got to start pushing through to get to this 884. That's the mean threshold of that candle. Then you look for the rejection block. Then you look for the highs. Then you look for the rest of this regular trading hour gap to fill in. That'll put you right, midpoint is 896. 896. That'll put us, take out these highs here. Well, actually put you right on the highs. See that midpoint? Time and price. There's 21 candle. I want to see 27 push through it. I don't want to see 27 create a low here and then send it up higher, because my stop loss is like right there. So I want to see 27, 28. Do get a little return into 30, 32, and then send it and fill the rest of our regular trading hour gap in here. Good morning, Paulette. How you doing? That looks like it's going to come down and give us a kiss here. Yep, that's me out. It just tagged me there. So I want to see us get above here now, and then I'll use that as a continuation. Or we come back and revisit this right here. It'd be nice. Just tag that, the edge of that. Right there. And you want to be one tick below that low. It's a full fill. Look at that. We're through the mean threshold already, so we're coming back to tag here now. See that? See if we drive through here. Yeah, that's where you go. That's where you're not acting the way I want it to act. High cleared, change of direction, retest. We've eaten through here and we've taken through here, so it's literally sitting right on the go no go zone, and we've already started ripping through it. So we're back to going lower again. This is our last candle here. We've taken out essential blocks that you don't want to see get broken, and they're already gone. Yeah, if your rule is not these things here, Hadi, if you're not looking at these levels and you trade on a 15-minute time frame, then that would be an excellent rule. You'd say, no, I'm not bullish until we get above that candle on a close. And then it's too late because you're already inside the bull trap. So you'd have to wait for the bull trap as well to let go, to start going bullish. So you can't dispute these small ones. I'm only arguing on a smaller time frame. So I'm not going to argue against you there. You're absolutely right. So, but if you're qualifying a run higher only based on a 15-minute level, then you're missing out on all the small little ranges here. That's the difference. I don't want to make it sound like you and I are in a disagreement over where direction's going. I totally agree with you on a 15-minute time frame, but I'm just staying on the horse here on a 1 minute. So we're going to have contradictory points of view when I'm going long, and you're like, well, long's not till we get above here. We're qualifying two different ideas of where we think long is going. I'm only talking about internal range liquidity. So we're back to this guy here again now. That's my line in the sand. Look at his 830. Look how sensitive that is. Now I want to see it get through here and then close through here, come back and tag that. And then we've got a different direction. Now we've got a different idea. And those equal highs here are going to be left untouched unless we're running a lower to make another low, another poke down, 1, 2, 3. That's your typical 3 drive down, and then see if we start running back up into that level again. Here's 930. Darren wants to add it to your Mark III script. Look at that, right through the line in the sand. Chop fell on the first candle. Now this is probably going to run up here and run all this stuff out and take all the fun away from wanting to trade that. There you go. That just cleared the high and the low. Let's clear this whole consolidation out now. Wick above. Seek and destroy in that first little area there. Not a tradable thing, so you shouldn't be chasing it. Wait for the first 15 minutes. The markets will give you setups every hour. So if you're trying to chase this, you're trying to nail this because you're an adrenaline junkie, then prepare yourself to get beat up. This is wood chipper time. Keep your fingers away from the propeller. The 5-minute chart looks like the zombie apocalypse going on here. It's running through bodies like crazy. Wait for a breakout out of here. Look at the 15-minute is even like wire fence, lavatory brush going on there. An hour's not that much better either. There's a swing retest right here. Send it up. Again, not really clean because it's chopping around, but I see the change. I see that we're up, going up right now from here. This is the bottom of the hour. Crazy Ivan, and she's going crazy. You want to go old school, first presentation, fair value gap. Look at the sensitivity off of that, hey? That's what we need, is a nice displacement candle. Get out of here. Not just another big wick candle. So I want to see some good displacement here now. And if you're asking yourself, why am I not on this? Why shouldn't I not be chasing this? Because it hasn't given you a decent entry yet. That's what we want to see, a nice little bust out here. Break loose from a noose. All right, so then we look for, I want to see that close in the next 23 minutes. I'd like to see that close below 817. And not just get this nasty, ugly looking wick. See, I would just end up getting another big wick. And then reverse. We still got equal highs above us here and here. I always look at this and I think, I got a big ass fair value gap sitting right here. We start to clear through that again. We take this mean threshold out of here. We've now got a candle that's closed below this level. So this is a model 4. You want to see it tag here and can continue coming lower. Watch that mean threshold right there. We're waiting for the first macro. Now, typically you could see one of these, a swing the low, taken out now. Watch a breaker form here, then come back into it and tag it. That's Ollie's favorite play. And then send it up. So created a little swing low here, come back through it, tag that breaker, and then send it higher. So you want to, I'm looking for a fair value gap forming in here somewhere. So kind of anticipate what you want to see the market do. So you want to see that little breaker forming in here. And that may take till 10 o'clock for that to happen. And if we don't close, yeah, you got to close below that level, that 23 level we were talking about, in 20 minutes. It's a retest of this little breaker right here. or this larger one. This one's buried inside here. Right to its mean threshold there. So now you can argue that we could potentially have two different directions. This is good. Now I want to see that little swing created here and get above here, come back into the breaker and send it up. Where's Ollie when you need him? It's a nice first presentation, eh? Looking for 727. Yep. I don't see anything clean in here yet. We have got a retest at the first presentation for value gap right here. We're going to send it down. There's that swing point we're looking for. Now I want to see that fair value gap get broken through, retested, and we'll send it up higher. There's the breaker. That's the midpoint of the breaker right there. Send it up, man. Send it up. Thank you. I am risk-free. I took mine right there. Right off the breaker. I told you about the breaker before it was forming. There it is. Now you want to see it run higher now and take these highs out. This is Ollie's setup that he talked about the other day. Happens twice a week. That's what we called for that to happen, and that's exactly what happened right there. I want to see it explode, get up into that 50% now. Retest the first presentation. That just got my stop right there. There's some chop. Retest. So now we're right through this. Nope, that's not clean. Don't want it. Wait for a structure shift now. That wasn't clean at all. Right up to a premium though. Look at that. What a shit candle. All right, so we're back to going. Where are we at here? 20-minute mark. 13 minutes left. Now, if we can close below this 23 level. This 23 level right there. 17 level. 817. So we can get below here on a close or in 13.5 minutes. Then you're looking for a retest of this and send it lower. All the way up into right there's the midpoint. Oof, that could really chop around in here. $15-minute needs to close 727. It needs to close below here. 808 hit the. That's where it's got to close on the 15-minute chart. It's got to take that out. 808, 807. It's got to close below this, and they use these breakers as support to go lower. So that's where it's got to close on a 15 that I can see anyway. And you see how we've had the big plunge down into the area you'd be targeting for? You want to see it close below that 808, tag it, and then start targeting this level here. We've already ran down and hit that. That's what makes this kind of a crappy wiki kind of not fun thing to be in. So don't risk your profits for something that's not clean. If Trump's talking, that's what you get. The market's just like unsure of where to go. $15-minute needs to close 796. You all got these opinions about 796. 796. No, 809. It's got to close below here, you guys. These are your not bull, these are your bear traps. And you've got to close below those and use them as support. So their bodies or wick needs to get closed below. And that's 807 to 807 to 808. That's what I look at anyway. If you wanted 7, what are you looking for, Russell? Do you want 727? It has to close below that. That's way down there. That'd be a nice target to aim for once you can get below here. 727. Wow, that's taking out multiple breakers all the way down. But that would definitely clean that up, Adi. I like your logic if you're looking for that all to clean up with a nice displacement candle. But right now we're just rocking it back and forth, sawing people up. And there's nothing in here worth trading. So that breaker run, totally smashed. I guess my question to you guys is, why do you think those levels, like whatever your logic is, don't just listen to my logic. My logic is not the only logic. So if yours is strong and you're 9 or you're 727 and you're 9, whatever Russell had it at 796, if those are solid levels for you and it meets your rules, stick with it, man. Stick with your rules. Don't go with what I'm telling you. If your rules work for you, then use them. Test them. It's the only way to get better at this stuff, is just test your rules. And then if somebody else tells you something, you can be firm and stand by your rules and go, nope, I don't agree. I'll stick to my rule because that rule works for you. You're going to hear a lot of people throwing a lot of stuff at you. And if you're not firm, and you'll just get suckered in, you get pulled into everybody else's trade plans, their setups and all that stuff, and it will completely throw you off. And you'll get frustrated because you're trying to make your logic fit their logic, and it'll just keep throwing you off. So stick to your rules, whatever rules you create, and don't let anyone push you off your rules until something cleaner comes along that you can prove that your rule is incorrect and needs to be tweaked or tightened. You got to stick with it, man, because that's one of the next things you're going to have to worry about in trading, is some other hotshot comes along, start showing you some funky things that they like to do, and it throws your rules right off. And if it doesn't help you improve your rules, you're going to get frustrated all over again. So you can see how we went below this first presentation, below it, above it, below it. Not what you want to see. This repeated going back and forth. So you have to wait for the zone to break out. So we're waiting for this zone to break out. And unfortunately, the highs are going to get clipped, and we may start heading here and not get an opportunity to get in that. So, que sera, sera, man. We just want to see it get out of here, start cleaning up this area so we can catch a run. And it's just chopping back and forth and back and forth. So we're back to this right here and this bull trap. They're literally overlapping themselves. That SIBI and that whole 2-candle bull trap. It's holding people. It's been trapping people long, taking them short, trap them long, take them short. Again, it just keeps blocking you. All those long runners. Cleaned out all the guys here that want to go long. It's stabbed through them multiple times. We have not cleared that area. So in the next 6 minutes, we want to see that level get cleared, and preferably this level get cleared as well, with a nice bold candle here. So we've got this first bull trap here taken and retested. That's good. Watch that high. We've closed above the high, tag it, send it up higher. We got 5.5 more minutes. That'll give us this could be a 10 o'clock turn for a big plummet down now. We run back up through here. Watch a 10 o'clock be the one that takes us out. I was looking for 9 to do that. It didn't. So now you're looking for 10 o'clock to create that high and then do the reversal. From a Tibbs perspective, it's a 9-10 turn. You see how we just cleared out that high? That little wick, clear out the high. If you didn't pay yourself at the high and move yourself to break even, that's one of my rules. Then you're getting squeezed now. And you think, ugh, we're coming back into this candle and we're coming back into here. If that's not where my stop loss is sitting, one tick below that low, this has to get out of here now. So here's the retest on this whole old high here. It's going to send it up. It's got to go high now. $8.97. $8.97. 890. Oh, these ones right here. It's got to break 8.97 to go higher. You're looking for 7.97? 798, 870. I don't know what your numbers are all about there, Russell. Clean out those highs. Yeah, if you clean out these highs here and use this as support, you want to see a pop. This is clean. That's a nice little retest of this. The 6 a.m. again. And again, we can't use the 6 a.m. because it's been beat up so much. Relying on it after here, maybe. I don't know. That's a swing, man. Look at that. Like almost 200 handles. No body above that yet on the 15-minute chart, and you've still got 3 minutes left to go. So again, this could be just another one of these ugly wicks down here. Remember, we were looking for it to close below a certain level, at that 23 level. And look at that. It just turned into an ugly wick, which we were saying we didn't want to see happen, and created another ugly wick and then sent it completely back in the opposite direction. That's designed to chop you up. How you humdingers doing? Hey, Derek. I'm late trying to resolve the Canadian versus Sweden issue in curling. Sad state of affairs. Did they cheat again? We have to say cheating, because I saw his finger do that little, but he did it before the release thing. But again, that's the double touch rule, right? Where he just kind of went with his finger. Whether that's his little finesse thing he uses, or I don't know. I'm not going to make excuses for him. If that's the rule, that's the rule. Don't screw with the rules. That's a nice little retest here. Let's see if that can go higher here. And the language, holy, that's not very Olympic-like with that foul mouth of his. Like, well, way to represent Canada, man. We're a friendly country, and here you are dropping F-bombs because some guy called you a cheater. The sport brings out the best in people. Watch here for the reversal. If we close below here and eat through the mean threshold of that candle, wait for a swing, and we're back into this range again. More chop. That wick that we didn't want to see happen is happening. Just swept out all the highs here, and now we're back into where's it going to go. We've cleaned out the bottom half of the market, the top half, and we're pulling back right back into the mire of the crap. And if you want to play that, go for it. It's just an ugly state of affairs to be playing around in. So if you don't want to risk your account, stay out of it. There's many, many salad days coming, as Michael would put it. and you want to try and inch, nickel and dime this market, the way it's turning so fast right now, if you're not super nimble, and this is the kind of stuff it's going to challenge your ability to be able to stay out of the market and be professional and wait for a decent setup. Because if you don't, you're just training your brain to recognize these high risk scenarios and jump into it. You don't have a risk aversion. You're like, I'm fully committed. I'm taking this. I'm going here. I see this setup, so I'm going to take it. Great, till it suddenly turns on you and whips right through before you set your stop loss. That's the thing, is you can't set a stop loss before you trade. Missed that long. You missed a long. There's not a decent long there, Russell. The next 3 a.m. candle is a target in that area. I missed all the drama with curling. Yeah, I think it's over with now, but I haven't kept up with it. There was some dramatic moment, and then look, even this is not clean. This little piece coming through here, not clean. Get through here. Has he stopped talking yet? Does that mouth stop running? As soon as we can see it stop, we wait for the market to smooth out again and start moving. Yeah, it's funny. Sweden and Canada, two of the sweetest non-confrontational. Yeah, that's true. That's hilarious. There's no neutral territory in Sweden when it comes to curling, and Canada for curling. They love their Bonspielers. They get the big Bonspiel going on up here, and they do love their winter sports. Do you remember? Do you remember when Canada won some snowboarding years ago, and then the guy lost his gold medal because he was under a marijuana, like the most mellow snowboarder out there, and he finished off his run. He won the gold medal, sitting on the sidelines eating chips, and then they pull his gold medal. He's like, "Oh, dude, man, why?" It's like, "Sorry, you're an enhanced performing drug, or drug enhanced performance," and it's thought, "Are you kidding, man? I'm mellow. This doesn't help my performance." We thought, oh, there you go. There's a Canadian for you. Close above, come back tag, pay yourself a rejection block. Yeah, not. It's coming. It's cleaning up. Just wait for your moment in the sun. This is better. We're through that level now. You see that? How we've closed above. We came all the way back inside. Ugly little bit of wick through it, but that's the close above that 15-minute one. Hadi and I have been mentioned to you guys right there. Retest. Send it higher. So there's the midnight candle we were hoping for earlier. This would have been a nice, had this candle not come in here, that's where the target would have been. So that was the big destroyer of hope. 10 a.m. news. Now pending home sales. Well, we didn't know that. Most snowboarders in the past were token on the wacky way. Yeah, the devil's salad. That was the long off the retrace. Ah, yeah. Okay. That's what you were talking about, Russell? Good call. Yeah, if you were sticking with a 15-minute chart, that would have been a beautiful little trade there off that. Actually, that did not travel through it. Here's the 15-minute here. Or is that another candle? We look at, is that a wick? Where's the high on that candle? Oh yeah, that's too high. So this is not here. We're looking at here or here. That went through, came back inside this one. Yeah, that's the premium box right there. Above the premium, come back in, tag it, send it up higher. Good call, Russell. Good call, man. Yeah. Right off the midnight. I like that. Bing, bang, bong. Right off that next upside bull trap. Now we're going to get some continuation here or what? What's going to go on? What are we doing? We turning? We heading back down? We just created this big ugly range here. This 200 handle range. And that's where we're keeping it. Oh, you're number one now. You're number two. So a couple more comments. You moved from second place to first place. There's a retest. When you want to see that go lower from here, I'm just going to throw a short on that. And I want to put my stop loss just above here. So again, thank you, TradingView, for your prompt response to my entry. And this discount box here, you want to aim for a discount down here. And thank you, TradingView, you asshats, for not letting me I got nothing here. I've clicked that already, and I've got no recourse. If that takes off, then it's going to eat my account. Oh, why they're doing that? Thanks for bringing me. I'm just above the mean threshold of this now. And see how we're closing above that level? Get out of your trade. Come back, take me out. Come on, get out. See how we traded below it, then above it? So, oh no, we're inside that one. That's this discount box right there. There's your box to box, all in one candle or two candles. Move to the sidelines and wait now. It's got to take this one. Got to close above that one. Close position, close position, close position. Is my indicator? Which one are you talking about? Mark 3 indicator. Mark's Mark 3 indicator is pretty close to ready. I guess you could say it's ready-ish. It'll get you the basic stuff and some basic chaining, maybe some advanced shading now. So if you guys want it, I can post it on the community chat. Try it out. There's a student manual that goes with it. If you want me to do, I've got that teaching module to go with it as well. So I can set up a time with you guys to do it, or I can just make a little video and post it, and you guys can do it whenever you want. If you want it, I will share it with you. Mine, on the other hand, is not ready yet. That's working. That should be failed now. Okay, I see what that's doing. I see what you're up to. I've got it hunting once it fails, I got it hunting again, so it'll still use that one to hunt off of for continuation. I was wondering why it's still in a short here. It's saying it failed right here and then re-engaged it here, entered in here for another short. So it literally says, if it fails, I'll reset and look for the setup again. And it keeps looking for that reset when it should just, I'm thinking it should just go idle because we've already hit here. I should put it in idle mode. Anyway, sorry, I'm still working on that one. We'd love to try it, Darren. All right. If you guys want, we could set up a Teams meetup. I'll teach it to you guys, and you can. I'll teach you what I got. And if Mark ever responds, which he hasn't, if Mark ever wants to turn up and make any comments, he can make some comments. Otherwise, you just get my version of Mark's setup. Look at those ugly wicks, hey? Exactly what you didn't want to see, and that's exactly what you get. And you're right back into the middle of the shit again, so not for me. I'm not touching that. Well, okay, you guys seem to be civil. No fighting going on. I think the bouncer will balance bookkeeping and bees today on the agenda. Prep for spring. Okay, Derek, take care, buddy. You and your wife, happy days. Happy days. Peace out. Mark, I will be much more available next week. I know I've been in and out, but if we set up a meeting, I'll be there. All right. Let me know you're the highlight of the day, Mark. So, you know, DM me in the other in the community chat there and let me know if there's a time you want to set up a meeting. I've got a doctor's appointment next week, so I won't be available on the 26th. So just let me know what works. We'll post it in the community, and if they turn up, great. If they don't, then they don't. '27th is your birthday. There you go. Happy birthday. There's my gift to you. There's my birthday present to you. Your setup all coded. But unfortunately, you get my version of your setup. I think I caught most of what you expect from your rules. And if you take this thing and you just click this to this and this, it'll totally nail your rules. There's one little thing. Unfortunately, a 1 minute chart, if it closes above the mean threshold, it'll close out the trade. But if I switch it to a 5 minute chart and a 15-minute chart, which is what your rule is, and that 1 minute would have closed it, but the 5 minute just makes it a wick, and we still close below that mean threshold, and it continues to go lower, you're still in the trade. So I think your rule of 5 and 15, you can just go click over to that, and you stay in your thing in your Mark III will stay on. If you want super precision, you don't want to see it break above that spot, you stay on a 1 minute chart. Anyway, I'll explain all that to you guys next week. Let's do let's do, how about the 24th? It's a Tuesday. Does that sound good to you? And I can do a couple of little tweaks. I think there's a few more little tweaks I want to do with it. But the 24th, if that's good with you, Mark, let's do that. We'll pick a time. Let me know a time on the 24th that's good for you. Are you, whereabouts do you live? Are you like a totally different time zone from me? You probably are. But let me know what your time zone is, what time you want to meet up. Florida, your same time as New York time then, okay? So you're 2 hours from us. Yeah, just give me a date. If the 24th works for you, then give me a time and we'll meet up, and we'll invite everybody else. And if they turn up, great. If not, you'll have to figure out the bot yourself. I might just record the whole session anyway and post it so you guys got some instructional video to go with it. Is there anything else out here that's worth trading? I want to see this come lower. I want to see that go lower. Put a line in there. I'm saying going lower. Stop loss will go right there. HNC. That sugar holding on that line there. Did some drifting below it. Cam model 1. Look at that nice little cam model right there. Boom. Right to the premium box, to the discount box, through the premium box. Retest the old high right there. Literally gap down to the high and went higher. Take out the high, pay yourself. Now you're right back inside this one. Mean threshold. So you're back to this last down close candle, looking for some sort of support here, and then send that higher, or see if that breaks through here and this gets used to take that low and start reaching back into here for sugar. Cocoa, away you go, cocoa. Wow. What has been going on with cocoa? Look at that breaker. Look at that beautiful little retest later on. Right there. Missed it. Cleaned it. Sent it. Wait for this go no go zone to get broken on the downside right there. Break, tag, and away you go. What a beautiful little Model 3. You don't get a Model 4. It just goes Model 3 straight into a continuation. Those are really great when you can get a Model 3 just on a full-on run. Model 3 becomes 3-4, and you get a ripper. Jesus, that's a nice one. Nice perfect return. Anyway, that's cocoa. We're not in cocoa. The bonds. I was watching this, looking at this bond market here. There's that premium. See how we trade through it? Come back to it. Now we got this SIBI. After seeing this, you wanted to see that SIBI get broken above, get above the bull trap and start running higher. It didn't. See how it ran back up into the premium box again? Rejected away from it. Then you want to see a retest of this little go no go zone. This is a small little tiny skinny one here. Breaks through it, comes back, retests it right there, and then boom, we drop down. So bond market, you could see, still acts, and I don't care what's going on in the bond market, whatever the news is that sets this turn, doesn't matter. The algorithm still shows you staying on the bus, and away you go. And that's with zero understanding of what goes on in the bond market. We're just looking at it from a purely algorithmic perspective. That's a perfect turn. And you may not rely on it, but I certainly love it. It's a beautiful thing. Oh, man, that's an ugly looking NASDAQ right now. US dollar, euro dollar, dropping like a stone. I like it. There's your Model 4 right there. We trade below the low. You get your fair value gap. You trade back up into the wick. Drop it lower. Ideally, you want to see this drop below here. This is a close. Come back and tag. Midpoint of this wick and this candle here. It didn't. It went straight into a Model 4. So there's your extension. You want to see the continuation. That's the continuation. As soon as it breaks that low, pay yourself, move to break even, and let the rest ride. Again, just my rule, but you're welcome to it. We should put these all in the same time frame so we're not... Wow. We're looking for the American dollar to go higher, but holy smokes, that's a big tear. That's really putting pressure on these guys. What's my Canadian dollar looking like against that? I'm just going to delete this off of here. I got too many of them that are running around. They upgraded it and it's got an error in the code. And they don't give you the code to, yes they do. The code's right there. Could fix that. Oh, but if you take Mark 3 and we do this with it, baboom, then we see trade and bingo, take profit right there. That's a nice take profit. That marked it a take profit point perfectly. That would have been an entry right there. As soon as it tags it, you're short. And then your take profit mark would have been right there, one of your take profit points, and it would have been marked down in here. So that's looking good. Even the German DAX is chopping around in here. Not giving you anything cool. Still waiting for Disney to give up the ghost and start sending it down. Give up the ghost. The fun house. We're getting near that time. One more month to go. I've got a bunch of stocks already I'm keeping an eye on. I think this is not going anywhere, you guys. We're probably going to wait till afternoon now. If you're going to wait for something decent to set up, there's nothing in here. Nothing at all. Oh yeah, sorry, I missed all this conversation going on here. What part of Florida? Great, let's do it after the stream. Okay. We could do, I'm in Orlando. Ah man, Orlando. That brings back some memories. Met a nice little Brazilian girl in Orlando. Nice little Brazilian girl. We didn't speak any. She didn't speak any English, and I didn't speak any Brazilian. But I later found out what gostoso meant. Anyway, not far from me. I'm in Jacksonville. Ah, Shepherd's in Jacksonville. There a lot. Oh, small world. You guys should meet up. Say hello. That'd be nice to see the community get together. That's awesome. Small world. If you're ever available, I'll come give you a one-on-one on the 3 a.m. strategy. Yeah, do that. Shepherd. There's an opportunity right there, man. You get it right from the master himself. And he'll give you a one-on-one strategy. Take it. Take the opportunity, man. Oh, it works on every pair, man. It works. You've set that bot on so many different asset classes, and it does it on everything, man. It does it on everything. That's how you know you've got an algorithmic setup. When you can put it on anything. Let's look, I'll even show you here. Let's go to a commodity. Let's go to a commodity here. Where's our commodities? Here we go. Let's just take cocoa. Let's try cocoa. Let's put your bot on cocoa. Let me get rid of all this so we don't have any confusion. Indicators. Let's see if we can find a Mark III. I may not have saved it in here yet. That's the version 7, and we're already in version 12. My scripts. It should be in here somewhere. Let me just go grab some. It's not saved yet. So where was I? Let's go over here. Oh, okay. We can just add that to the chart then. There's a 3 a.m. candle. No, where's our 3 a.m. candle? Let's try this one. It's idle. Stand by. There's I'm trying to debut your thing here, and it's not giving me a setup here. Is it because we have a delay? Let's put on the 15 minutes, see if that makes a difference. No, it's not even finding it. Sorry, Mark. Touch 60. What's going on here? It's not even recognizing that one. One tree fail. Well, that's not working. Stand by it. Let's go somewhere else. This is good because I'm going to send this to a... Let's try it on a euro dollar. On a 1 hour chart. Okay, what's working on there? Let's do it for multiple trades. These are all wins, by the way. Win, win, win. Those are fails, fails, fails. Win, fail, win, win, win. That was this one this morning to the one below. So I'll give you an idea of how many wins you get using that. And a long, then it fails. So that's all a win as well. Wow. Now if I switch that over to a nearest one, let's see what that does. There's a win. Let's try it on something different. While this, while the NASDAQ is dicking around there, I'm gonna keep playing with this one. Let's put it on the German DAX. That's a 12 right there. There's your first win here on the DAX. What else can we put on? Let's try just some foreign asset. Or let's just try a stock, for example. Let's take a Coinbase. Let's have a see what we can do with a stock like this and throw it on here. See if it does anything in here. You gotta get it off there. Let's put it on a 15-minute chart. Oh, is this regular trading hours? Let's try advanced trading hours. Extended. That might be why it wasn't working. Seven, 9, 4. Oh, because there is no 3. Look at that. 1900. There is no 3. That's why it's not working. There's no 3 a.m. candle. That's why that's not working. There's no 3 a.m. candle. So we can't use your 3 a.m. one on there. Interesting. That's very interesting. I'll leave that on there. Leave that on the daily chart. That might have been why the other one wasn't working, because it's not a 3 a.m. candle. That's why commodities don't work, because they only trade during the day. Got it. Banks. I think banks trade 24 hours, don't they? Let's have a look. Let's throw it on a bank here. We've got a 3 a.m. candle. Nope. There's no 3 a.m. candle here either. Nope. Sorry, it doesn't work on those as well. So we can't see if it works out elsewhere. Sorry, Mark. Ones that don't trade 24/7, we don't get a... We can't use your candle setup. And that's still burger, meat grinder, oil. Oil trades 24/7. Let's try it on here. That's the 3 a.m. candle there. That's the fail. Now if I switch that over to a 15-minute, see how it's not a fail now? Ran through, we triggered. Wick all broke the outside, so that would have been a fail. It doesn't close there, but breaks the other side. Or idle. So if I change that into a multi-trade though, and then we trade it to the next nearest candle. Where is the next nearest candle? It may be way away here. Stand by. Look at all those winners and losers. Boxes are winners. Those are all winners. Those boxes and the X's are where it fails or closes off. So you win and then it comes back, takes you out. Reset. I can't see what there's like down there, but there's a lot of boxes there. A lot of winners. A lot of winners. just want to test something here. I don't know where the next one is. Would have been way back there. Might be outside the history for us to see where the next one is. Anyway, you get the idea. Crypto. Is crypto? Oh yeah, crypto Bitcoin. That's the one I've been testing it on. Bitcoin has let's get rid of this one. This is my go-to chart for testing get those winners. So if we go here and we say, let's try multiple trades. And let's say we go over here and we say, let's take multiple trades. You can say your entry can be a touch or a close. And then we say you have multiple take profit levels. You can just go 1, 2, or all 3 if you like. Target is the nearest. Let's do the nearest. And then do, let's look at that. This is 1 hour. Let's look at 15-minute. So what'll happen is when it's active, and it'll target the next one for you. So when it breaks this point here, you can either enter as soon as it closes below the very next candle, you can enter that, or when it tags it. So when you get your long there, then you start to run back down, and as long as it doesn't close above that consequent encroachment or mean threshold of that 3-hour candle on a 15-minute chart or short, and your first tag, it would highlight the next one below you, and then it'll give you your take profit model 1, and then 2 and 3. So if that's the high of it, the midpoint, and then the low, and then it'll mark up the next one. Once it breaks through that level, it'll highlight the next candle. That's the little glitchy part I've been trying to work on. There's the one below. See how that's the midpoint target? Midpoint target. And then this one here. Down. Lowest point here. 115. Let's see if that was a 115. 115. We'll put you right here. Oh no, this is the new 115. What's below that one? Have we got anything back there? Let's go to a higher time frame, see if there's anything else back there. Right there. So you got that guy. So this is the next one it's going to start targeting. Anyway, You guys can try it out. If you find glitches with it, which I'm sure you will, just let me know what they are and I'll continue to work on it. Shouldn't it need courses immediately, Darren? What courses? Shouldn't it need courses immediately? Sorry, I don't know what you mean there, Hans. I just think it might not work with delayed data. Yeah, it probably won't. Yeah, you'd have to, when you guys get it, you can try it out on your different platforms and let me know. And if I need to tweak things, just send me a list of things and I'll tweak it every once in a while and see if we can get it to work a little better. Oh, well, I think that's going to be it for me, you guys. I don't see anything else sexy setting themselves up there. I'm just going to check my one out here. Okay. Oh, that's why. What a chop in there, you guys. Not worth trading that. I think that's it. I don't think we're going to get much more out of this morning. I think we're just going to be chopping around in here until we can break out of here cleanly. We're stuck in that 200 handle range, and if you're trading it, you got some cojones. But even if you're staying on the horse there as a practice, staying on the horse, your eyes are going to be sweating trying to stay on these little tiny changes of direction, support back into a range, box to box trade there. Not that you would actually take these trades, but if you're trying to stay on the horse here and that's the first imbalance you see, stretch it out. You'll see it sitting right there. See how the bodies trade through it. You come back into it. Wick, ugly little wicks that come through. You'd have to keep your stop loss here. Comes through it. Then you start targeting the discount box, which is first one's here, second one's here. Ran all the way through. Tagged your second one. Reversed. So the bodies are, this one here, drop below it. That'd be it for me. Sloppy price action. Then you're looking for a run all the way back up into this one here, or premium of that whole range there. So if you just trade off of that and say, I'm going to go back inside the range again, stop loss would sit down here. As soon as it hits 50%, take half your trade off, blah, blah, blah. I can still see it. I can still read it, but doesn't mean that you take those trades. They're just crap. Now I want to see that hit here, roll over and come lower. I don't even want to see it trade through that candle. So it says, okay, I'm going to trade through it then. That's the midpoint right there. You're going to pop through and take that candle on the high with a close. It says, no, I'm going to stay right at the midpoint. 8 seconds. Push through or stay. Make up your mind. Right there. It says, I want to go up just a little bit more. Look for a run back in here, 50%. This is compression. This is all just shit price action, but it's a great place to practice with your staying on the horse. And how many people are in here right now? 12. There's 12 of you in here. If you're practicing, this is the best environment for you to sit in the candles on a 1 minute chart and watch and study and stay on the horse. And see if you can. This is a great opportunity because when it turns on you, you got to be prepared to catch the turn. And don't make the trade. Don't even do a paper trade. Don't even any way encourage your brain to think that you need to be hitting them buttons in this kind of choppy environment. Just kind of put it on paper, mark it up and say, I want to see it hold there. What's my upside target? What am I going to reach for over here? If I take that one, do I get my continuation off of that? Yes, I do. There's the continuation. We'll get a change in direction. Do I come back and hit that and run lower? Or do I stick in the midpoint? You don't. You wick down through here. What did that run back to? Oh yeah, that last up close candle there on this little run. I need to remember that candle. Make a note of it. Screen capture it. Say, watch that level. It came back to a specific spot. Mean threshold of that candle. Perfect data point, then left. Then you want to say, okay, now we've got a swing and the swing below a low, and I've got a change in direction. I've traded above it. If I can come back into that, I can start targeting this high. So it trades back into it, target the high, great. Now I see a little change in direction again. If I trade below it and trade back into it, I want to take that short. There you go. Trade takes it short. Stop loss will be sitting above that, the mean threshold point. You're short and you're aiming for down here, box to box trade inside here. Trades all the way back to it. You say, if we trade through that now, I want to see this come back into this level and go lower. If it trades through it, I'm on the wrong side of it. And it closes way up through it. And you go, I'm on the wrong side of that. So if your stop loss was sitting just above that, it would have ran straight through and took you out. So it ran through it and you go, okay, now I've got this premium box. If I can trade through that, then I'm looking for a continuation for at least to the midpoint here. And it closes right. It closes here above it. Comes back, eats right through it, and runs right through it. And you just go, I'm on the wrong side of it again. Then it runs right back up and it closes above. You go, good. Now you want to see it go higher. It closes right through it again. So that's where you get beat up using that rule of the premium. So you wait for a new setup. The horse, it threw you off the horse there, threw you off the horse there, get back on. Welcome to consolidation. If it's not acting cleanly, you can see why you're getting thrown around there, just repeating that same rule over and over again. So again, low swept, look for the reverse. You don't get the candle back into it. You have this one run all the way through. So you go, if it takes out that first bull candle, do I get a retest? No, I don't. It runs through the next bull candle. I want to see that candle get supported then. It does, sends it higher, pay yourself at that high. You see a reversal. If it trades back into that, it does right there. You want to see it trade back into that discount box. And boom, that one's cleaner. And now we're back to this one again. We want to see a body trade above here. It does, tags it, runs to the high, pay yourself at the high. Now you want to see that get used to go higher. Now you want to see that take out the high. It does right there. That candle closes above, trades back into it. Stop loss will be one tick below the low. It hits it, runs higher, pay yourself at the high. Now you don't want to see this mean threshold get taken. Seeing this coming back into here, not what you want to see. You want to see that leave from here. Take that high out, pay yourself, move to break even. Always pay yourself at the next high and then move to break even. That's your risk-free trade right there. Now you're risk-free. You've paid for the trade. And if you're wrong, at least the trade's paid for. Didn't cost you anything. And we're targeting the next highs. Does that make sense? So that's how you practice staying on the horse, you guys. And there's an opportunity in here for, you got to know what the rules are in order to stay on the horse. You're going to say, what the hell kind of horse am I riding here? How do I know these data points? If you don't understand the basic concepts of ICT's candles and where the data points are in each candle, you're going to get lost here. This is all going to be like, what the hell are you guys talking about? It's all noise. It's all conjecture from your opinion. And if you haven't studied any of his stuff, you'll never understand what it is that we're doing. You'll say, oh, you're just form fitting it. And we call it before it happens. We call it while it's happening. But if you don't understand the points, you'll see why you want to understand it. But sometimes it'll look like magic to you. So you've got to understand what is this one candle? What are all the data points in that candle that mean anything to you? See how you got to pay yourself at the nearest high? Because if it turns on you and takes you out, you're out of your trade already. But at least you got a little piece off. And you're saying, I'm getting to risk free because I don't want to see it come back there. Not because I'm trying to chase my trade, my stop loss all the time. I'm just saying, it's visited that data point. I don't want to see it come back to that data point again. I want to see it leave. So it comes back, you go, oh man, I don't know. My stop loss is sitting right there. Originally it was here. Tagged it, went higher, took that high, pay myself, move my stop loss to break even now. I don't want to see it come back in through here. Takes that high, either pay yourself again, and now move your stop loss to cost of the trade. Comes back, takes you out. Then you're going, whew, good thing I followed that rule. Right there, took me out. If I had left my stop loss down here, I would have taken a full stop. If you follow the rule of pay yourself at the nearest high and move your stop loss, then you're counting on that to hold, and it's not, because we're in a choppy, crappy environment. So you wait for your setup, a new setup to occur. Not that you're taking a trade, but you're constantly training your eye to look for a new setup. So for me, it would be, you want to break this low here and use this as a no-go zone to go lower and you're targeting a rejection block, a hold low, 6 a.m. candle. First presentation. Oh no, that was a line in the sand earlier. Let me get rid of that because that's usually my midnight open candle. Any questions before I leave? Any stocks or anything you want me to look at? That's going to be it for me until this afternoon. If things start clearing up, that's when I'll hunt for something and I'll post it in the channel there. Anybody else? Gotta go, D again. Thanks for everything. Way too choppy for me. Totally agree with you, Abs. See you later, man. Sending love, brother. Can you check UPS stock? I certainly can. I certainly can. UPS. UPS. Which one? The TSX or the NASDAQ? Are you American or Canadian? Which one of you are? American. What have I got? I've got multiple little. Let me take off all my little bots in here. I'll leave that one on because that's a good one. So I just want you to see how this new day opening gap works even in the US Postal Service, Parcel Service. Got a high created here. We've got a change in direction. We also have the change in direction is also held inside a new day opening gap. We trade through the new day opening gap. That gives us our first little swing point. You don't get it up here, so you wait. It comes back, and right there, there's your first, second, and third entry. And then you got more up here if you really want to go back higher into that range. So you don't want to see this get broken. If that gets broken to the upside, look for potential run into here. But anyway, there's our new day opening gap. We trade through the old new day opening gap, come back to the mean threshold, and then work our way down to the new week opening gap. And you'll see how these new day, new week opening gaps work and how they support and resist price. See how there's the new week, come back into the midpoint, new week again, through the midpoint, and we hit the old one up there. Bang, 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 off this upside candle. You hit off of here, come through the mean threshold, use the mean threshold to go lower, take out the new week opening gap, and then we start creating new ones down here. So anyway, let's look at using my my rules. What is it I'm looking for a change in direction? So I'm looking right, and this is a 15-minute chart here. That's the first imbalance I'm looking for. And if you want, you can include the whole thing with the fair value gap, because you got an imbalance below it. If there was one above it right here, then you would include that as well as a suspension block. Michael calls those suspension blocks. This is just a an imbalance down here. So you can either use it by itself or use it in combination with this one here, which is what I would suggest. I don't see anything else down here. So you see how we have a change in direction. Body trades above it. We come back inside it and we go, even if you chose that little imbalance right there, see how we come right back into it perfectly. You can enter in on a stock at 114.75. Your stop loss would sit down here and you'd watch, because if we close below this, take your stock off. That's the fail safe that I teach. The fail safe will get you out before it comes for you, because that now turns into our model 3 extension model. So we're using model 3 as an overlap to protect ourselves as a fail safe, so we don't get our stop loss ran out. That's in case it just does a quick run on you, that's all. And you're only risking 1 or 2% of your account there. Anyway, you're taking a long in that stock, or an option long if you're doing option trading. You take an option long there at that point, and as soon as it takes this high, you pay yourself. Move your stop loss to break even and pay yourself. So now we say, where's my target on the upside? Like array to like array. This is what I want you to see right here. Here's the premium guy right there. Right there. Okay. That's the premium array. So this is model 1 reversal. Here, internal range liquidity hunt, model 2. We start hunting inside here. You're pulling your fib tool from high to low. And this is why what I'm teaching you is fractal. That is on every time frame, every asset class. We're in the United Parcel Service here. So you got a perfect entry for a long. Pay yourself at 50%, move to break even if you're using that model. Okay? Or you use 62%, comes back to 50, you're done. That's your internal range liquidity model if you're just using this. Now, hindsight's 2020. We can always say, oh, you screwed that up. You could have made more money out of that. Then pick a different model, because I have like 6 or 7 different take profit models. This is just one for trading internal range liquidity. You're at 62%. You got in here, you got out there, you made some money, move to the sidelines and be happy with that. wait for the next model to occur. And I'll show you how you get back in on this model. If you just took 62% here and you got out, I'll show you how you can get back in here and get back in sync with the run to go higher. Take profit model 1. So take profit model 2 would be box to box trade. Here's your box right there to box. This is our premium box right there. Bing, you hit it, you're done. So that's your box to box trade in UPS. And then you look for model 3. Model 3 is your range extension model. So we're looking for this range to extend here. So as soon as we trade back into our premium level, which is right there and there, we extend the range extension, move to the sidelines, or wait now for a body to close above here for model 3 and 4. Or sorry, model 4. This is the model 3 extension. Now model 4 is we close above here, come back and use that as support. No body closes above there, so you've paid yourself. So you got model 1 to here, or sorry, model 2 to here. You got back in again to go model 3, and you got all that juice from perfect entry to perfect exit right there. You're done. Move to the sidelines and wait. You want to see this level get broken on the downside, and you see it goes, literally opens here, and you don't get an opportunity to get in on it back here. So you would have caught all of that with precision in that market, and then all of a sudden you don't get an opportunity to get short on there. It runs all the way through the discount to that discount box again, and right now that's where we're staying. Your internal range liquidity in here now, and there's nothing in here that supports price because that's well over 50% of that range. If I pull that fib from there to there and there to there, 50%'s been hit. So there's no trade in here. There's no trade. You're still inside this larger range here now. It's been extended, so that's your new large range. And now that you've made a turn, after taking that out, I've got no SIBI in here. If you could dig down to a 5-minute, you might see something. Yeah, right here. So here's your change in direction. And we also have this little guy back here. Change in direction, you come back, you nail it right there. Beautiful, perfect. Entry, long, take the high, pay yourself, move to break even. You're in a risk-free trade now, and you're targeting right here at 116. If it comes back through that candle right there on a close at 115.20 and it closes below that, get out of the trade. That's a 5-minute chart on US partial service. This mean threshold, remember, that's the bull trap. We trade through the bull trap. Now you're looking for a touch on the bull trap, really aggressive to leave, and it doesn't. It comes all the way back. You say, my line in the sand is the midpoint. Remember the midpoint I talk about? Look at that, right on the beezer. It closes on that and says, I give you a little wick down there, give you a little kiss. I want to test this, graded response. I'm using a C-level trade here. I'm not fully closing it in, but the body's respecting that. And you say, it has to go now. Your stop loss that was here, or sorry, one tick below that low, now moves to there. As soon as you see that candle close, you say, my stop loss is moving here. I don't want to see that go there now. There's no reason it should keep coming down here unless it's coming to fill that in, and I don't want that. So then it leaves, and you go, great. As soon as it breaks that high, I'm going to pay myself and move to break even, and plus the cost of the trade. It takes the high. You're back inside here, and you say, I don't want to see that little tiny level right there. Stretch it out. You'll see right there. See it? I don't want to see that get closed through. So I want to see that close. And now you're looking at the midpoint right here. That midpoint has to close above that, use it as support, and then start aiming for higher prices. And you'd be targeting up here. That makes sense? That's chopping it right down to a 5-minute chart for you. That's a level of precision that is crazy. Amazing. Yes, it is. It's amaze balls, my friend. It is amaze balls. It is crazy precision. But the rules, you got to follow the rules, man. Got to follow the rules. And again, my rules, but that's my rules. And I explain the rules over and over again every single day. And no, I don't have a video on all the rules. I'm going to make a course. I'm going to make a course. It's got all the rules. It's got all the take profits. It's got the 4 models. And that's what I'm going to build. You're very welcome. I don't know what to call you, but if you've got a name, I can't even pronounce that. Nebuloni. It's Paul. Thanks, Paul. Paul's easier to use. Thanks, buddy. Welcome, Paul. Thank you very much. You're welcome. Anybody else got something you want me to have a look at? Shepard, you're welcome, buddy. Anybody else want me to look at another particular asset? I'll give you a couple of minutes, and then I'm out of here. Once again, we're still in Crapville here. So, anyone want me to look at anything else? Yes, no, yes, no. Gold, says Hadi. Gold Hadi says, check this out. Let me get rid of all my talking to my AI. Look at this high here, hey? Hit it. Wait for that to break the upside. Breaks the upside. You don't get a tag of it, so you wait. If you don't get the entry, which is right here, it's an actual perfect entry. If I stretch this out, you'll see it. You got to stretch out your chart sometimes. You see it right here? Like, there's your swing, there's your SIBI, break it above, come back in, tag it, load on there, your stop loss goes in past the midpoint of this last down close candle. You've got to give it a bit of a wick punch, a bit of freedom. But if you really said, nope, my stop loss is sitting right there, I do not want to see this whole thing fill in. If it does, I'm not interested. I'm looking for precision entry. This is that point we've been talking, and Russell and I have been talking about this in the past, is demanding that the market give you what you want. So you have an old high right here. You have a fair value gap. So this is called confluence. When you have 2 or more or 3 or more areas that overlap one another, so confluence 1, confluence 2, and this BISI, this is a Michael trade right here. As soon as that thing comes in here, he likes to trade the BISI side. I like to look for that guy right there. But he'll come in and he'll take that trade there and he'll go long on that. Okay? Nothing wrong with that at all. So old precision point inside another precision point. So we've got multiple confluences that say, I want to see perfect. I will layer in 1, 2, 3 trades. My stop loss will sit right below that, or right below the midpoint of this breaker here. I'll sit down here. And the moment I take out that high, or this high here, I now move my stop loss to break even. I pay myself a little portion here, and I let the rest run. My target is right here. I take that and it rips right through that, and I go, great. Now, if I could just come back and give this a kiss, I could load that, what I took off here, back on here to continue going higher. You don't get that. It just keeps running on you. So whatever little piece you got left, you kind of trail your stop loss up and you decide what kind of take profit model you want to use. Are you going to use take profit model? You can't use 1 and 2 anymore. You have to use, well, I guess you could use 2 still. You could pick a higher time frame over here. Objective. Like right here, you would target 5006. That would be the first target. 5006. Okay. So we get in here 5006, 5006 right there. So it breaks your 5006 and you go, ooh, now if that keeps going, if it comes back and tags me there, I'm going to look for a continuation right there. So I'm just going to put a box around that because we're going to look right here as an area of interest. That's why you look for these lower time frames. Sorry, Hadia, I'm off on a little tangent here. So let's go to a 5-minute chart and look back there at that box at 506. Do I see a entry for 506? So we break through 506. So now when we get back over here, I want to know what's the upper zone of 506 was looking for. So I'm going to put this box here like this, because this is the target I'm aiming for. I'm just going to call it a breaker. It's not a breaker, but we're just going to, that's the box I want to start looking at. So 5-minute chart at 506 right here. So there's the upper portion of that premium box. So if we're targeting, we in here, we've targeted the first one, we leave a piece on for the next one, we hit it, either pay yourself out there or move your stop loss to the previous one. The moment we break this to the upside, now we're going to add more and target that high. We add more, target the high, you hit it, move to break even. It comes back, tags you out, you're done. You wait now for this to break the downside of this premium 15-minute level. So there's your 06, so that premium level, and then we use another model, which is our extension model right there. That's all you get. You pay yourself. That's why that rule is in there. And it comes back, tags it. That's still good. You're still good. You're still good. All the time you're in here, you're coming back and tagging it. You're good. Once you've got that piece taken off, if you move to break even, you're done your trade because it's just come back and taken you out. If you decide to use this as your go, no-go zone, watch that level and we'll see how it works. Boom, 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 bouncing around on it. You may not like sitting in there for a few hours of that really not progressing any further than that new high taken. You're constantly looking for a reversal. Here's the new change in direction right here. So this becomes the new, I don't want to see it break through there. It breaks through there again and you go, ugh, don't like that, gonna wait. Mean threshold of that candle holds. Now you want to say, if I close below that level right there, come back and retag it right there, went through it. Now you wait for a market structure shift. Comes back, tags it here. We go lower. Now we're still inside this 15-minute one. Look at that. It's just sitting right on the bottom of the 15-minute one before it finally rolls and says, now I want to go lower. It uses the midpoint, sends it lower. That little breaker we're looking at on the 5-minute or wherever it was over there. Oh no, that was the 15-minute one there. What was this one for? Oh yeah, it was the 15-minute over there. Sorry. This is the 5-minute level. See how it's using the 5-minute level? Sends it back down inside this range. Look for your discount box here. And then we look for a low taken. Look for the swing. Right here's your little imbalance. Right there. Body trades above it, trades below it. Move to the sidelines, wait for a market structure shift. That's my rule. Get out. Don't touch it. Otherwise, you're going to get bounced back and forth. So you wait. That one trades through. You go, great. Now I'd like to see it break through the high of this. It breaks through the high. Now come back and tag it and ask yourself, where are you inside this range? Are you over 50%? Are you paying a premium to try and get more premium out of it? Or do you want to wait for it to come all the way back into our level here or a consolidation to go higher? You don't get that level. So not something you want to wait. You don't want to mess with that. Right? Because right now that's premium inside that range, and I'll show you where it is. It's premium here. It's a discount. So you're way over premium there. So we're looking for it to test here. it hits, that's in a discount. Now you want to see it leave, and it just quickly comes back, and you say, if my stop loss is sitting one tick below that low right there, it comes all the way back, puts a huge squeeze on you, but never takes your stop loss. And then finally runs up, then finally takes the high, and then finally reaches for the premium, which is right here. Tag, 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 sends it higher. And then we got back to, so if you're putting your stop loss one tick below the low, you would have got squeezed. But eventually you see a change in direction here. Wait for it to get above that high. It does. Does it come back and tag the highs? The last one's right there. It tags that one. That one's buried inside the large one. Large one gets hit. Then you finally get go higher. So you would have got a real big squeeze on that stop loss one tick below that last up close candle's low, which is the wick. You don't want to see the mean threshold get taken, because usually if the mean threshold gets closed below, I tell you, we're hunting for this, and you never even got that either. Crazy. So that would have been a messy one. But if you have a very strong conviction that that stop loss is what I'm risking 1 or 2%, and my stop loss is staying there, and I'm going to give it a chance to come all the way back into that little thing there, and I'm all right, let her buck. Then you would have caught a nice little run eventually once it straightened itself out here. Came back, it tagged the high, went higher. Wait for this high, get closed above. Then you wait for your institutional order flow entry deal. You see a change in direction right here. That one actually closes there below it. And we're starting to target this candle's high and its wick. So you take 50% of that wick. And we do this in quarters. You get to see where how sensitive that is in quarters. Quarters. Look at that. That's just the wick. Once we close above the wick's high, when you got big ass wicks like this, break it into quarters. Use the weakness occurs at 25%. Or strength occurs at 25%. If we come back to 25% and start going higher, and you don't get your full midpoint, that's what you want to see. So when you see it come back at graded responses, I want to see that show some serious strength there. So it comes right back in, tags it. You go, that's it. I don't want to see it go back lower and go, oh, that little wick. Psych candle, and then says bodies are still above it. Then we leave. That's why that first 25% tells you lots. So when you see that change in direction there, you go, all right, I'll give you some wiggle room. I'll give you a retest of this. I don't even want to see 50% of that range from there to there. If this is strong, that 25% of that wick should hold. And it does right here. A little tiny bit of mohawk, as Michael would call it, and then sends it higher. All right. And then you get a continuation. We're targeting our premium box up here, right there, and then we're looking for what else have we got here? There's a little tiny one sitting right in here. You see it? I'm going to stretch it out just so you don't think I'm form-fitting this. Watch. This is why you stretch out your charts, you guys. And Hadi, we've seen this so many times, hey? That is right there. Watch that level. When we pull it, when we go over, watch how sensitive this level is. Sorry, let me make sure it's right on there. There. Watch that level. Once you may miss it, right? But that's the premium. Close above it. Or the Model 3. Look at that. With perfection, with zero drawdown, it tags it, you go long. Stop loss would sit one tick below the midpoint of the last up close candle. That's where you want to see that hold, and that would be that little fella right there. Once that gets broken to the upside, right there, I want to see that hold. It's mean threshold, hold price. Look at that. We have a body finally break through. This sucker rips. That's some great stuff. Anyway, there's the perfect entry. You got to find it. You got to know what you're looking for. That's the continuation model or the extension model. Then you want to see continuation. So the moment we break that high right there, you want to see it come back and tag it. And then the same thing I just gave you here on the, watch this. I'm going to pull this out here. You want to see it get strong, right? As soon as a body breaks that high right there, if it's strong, that first 25% should give us our high to 25%. Keep going higher. Then we get a change in direction right here. See that 25%? I tell you, wicks are, Michael's wick theory, when he started bringing that shit out, it was like, oh, that's magic, man. That's magic. That has been one of my favorite things he brought out, and that wasn't till way after our 2016 students, when we were all in his 2016 course. 10 years ago now. Man, time flies, hey? Time flies. Anyway, here's our change in direction. Right here. Oops. Right there. So we have a change in direction. We see how the bodies come up and respect it. Wick, mean threshold of that last up close candle. It's holding price back. We send it lower. We come back into that premium box again. You say, I want to see it close below here for me to go lower. It's got to close below there, because you'll see a little bit in a bit why that's so important. Okay, so does it close below there? No, it doesn't. We're on a 5-minute chart. It does not close below the low, so I want to see it now. After taking these lows out, I see another change in direction right here. Follow the rules. Follow the rules. That's what I'm looking at. So I want to say, in order for me to start targeting these highs, the rejection block and old highs, I need to see a body break this high. It does right there. You see that? Comes back all the way back inside it. So you load on 1, 2, 3. You're in a discount portion of that range. And now you say, I want to see that. My stop loss goes 1 tick below the mean threshold of that candle. I want to see it go higher. It goes higher. As soon as it takes out, there's a little tiny imbalance right here, and there's that premium level. If we close above the premium, I want to see it extend the range. It literally opens, extends the range. Take your money, move to the sidelines, or take your money and move your stop loss way up in profit. It reverses, and you say, if we trade below here now, I will get in a short. It trades below, then trades above, and you go, now that we can go long. I'm out. I've got a change in direction right here. So this one, once we go above it and we create a swing high, there's the new change in direction there. And this is gold. We're just reviewing gold. So the change in direction, if we can come back in and tag that and go short there without closing through it, that's a short. Okay. So we'll click one candle at a time here. So there's the short. You see it go right to it. Right there. Comes up, nails it. Your stop loss goes above the high. Runs down, takes out the low. Look for the mean threshold of this candle to get taken out, and then that SIBI. So box to box inside this range. Here's your box to box. It nails it. Now we look for this level to act like a go, no go zone. The moment we close below it, look at that. It literally ripped through and went from it didn't close below it. It just literally opened on it. It gapped down and then tore off. So you're looking for a return back to low, mean threshold, bottom, mean threshold of this candle, consequent encroachment of the wick, mean threshold here. It's high, and then the no-go zone. We don't want to see anything get back through the no-go zone. Otherwise, we're going higher. We're looking for a run back deeper inside this range now. So we click a couple of candles over. There's the retest of that little premium over here. There's our little extension. Now I want to see this extend. So if I want to see it stop there and start driving down lower. and we're giving it up to here. So that's our no-go zone for higher, and that's our continuation. So I want to see this candle's low get taken. There you go. It gets taken right there. Pay yourself, move to break even, and let the rest run. And now you're in a deeper part, or a larger range. See that? And it comes back. And if your stop loss is sitting at break even plus the cost of the trade, you don't want to see it get back through there. If it does, then we got a new change in direction, an old low taken. Here's a SIBI. We get above that and our no-go zone. We're looking for a premium. Get on top of the premium and send it higher. If not, our no-go zone still in play. And then we go here. Look at that. Comes back, retests that again one more time. And look where we're sitting. Way down here. Inside that larger range we were looking for. That's your lovely little Model 4 right there. This was a Model 4. You could almost say that's a model, because we got an extension already. You want to see a model, a continuation. That would have been the continuation. Then you get another continuation, taking out that low. So that would have been a Model 4 continuation, all the way down into a little discount way down here. Draw this little sucker out. You'll see it. It's a box to box. Right there to there. Boop. Way up there to way down there, inside that huge range. Done and dusted. No body through here yet. You get a body through that, then talk. Otherwise, that is a nice little internal range, box to box precision, with multiple opportunities to get in here and here for a short, targeting that area down there. Man, that's lovely. That's lovely. Do you see that, Hadi? You see how sexy that is? Love it, love it, love it. So, see how we trade through it here on a close? Come back into it. Look, what are we looking for? Range extension. I want to see this low get taken. Get a bit of a wick through, bit of damage, but whatever. That's the lovely part of wicks and all this consolidation. Cam model, one entry. So you have cam model overlapping with a no-go zone continuation. It takes out, it took a while, 20 minutes or so before it finally ran down, took that out. And where did it head for? The next box to box. So here's one box right there. The next box is here. Hits it. Now we want to see us break through that level. We've got a new change in direction here. So this is our suspension block, and it's huge. It's from here all the way down to here. See it? Now this, you guys got to see this. The D, this is a good lesson for you. Listen to this very carefully. Okay, listen very carefully, because I've said this rule to you guys many, many times. So we have one candle. We have this imbalance right here. If you use the whole suspension block, that's fine. You have to use the whole thing. If you're just using these imbalances as key levels, that's your thing. See how we close above it right here, and then we come back inside the fair value gap imbalance. So this would be like a suspension block, but because it's attached to another one, you have to use it all. Okay, so that, all of that has to be included as a SIBI. So you wait for a body to close above all of this and retest it. Well, there's that whole range. So you're either going to catch this one off of here and say, now I want to see, I'm targeting the bull trap and this premium box up here. So ideally would have been this, just pop into here. That would have been like array to like array right here. But you have like array to like array right there, right? So anyway, we go up here. So this is the lesson I want to show you. So when you get one candle that continues to go higher, if this is our block, We have to wait for it to get closed through. So you wait, wait, wait. It finally clears through here. And now we have a candle that closes above a high. See that? And it closes above our SIBI. Now I want to see it get retest, and our bull trap is actually inside the boundary of the SIBI. So when it comes back, we don't want to see just a tag here. We could see a tag. We could see half that wick, the half this body, all the way through to this. So if you've got one little, your stop loss is one tick below the low, which is typically where you put that once the high has been traded. It comes all the way back, tags right perfectly off that SIBI, and then goes higher. Takes the high out, or takes its next high out. Pay yourself. Now we have a new change in direction right there. So you say, all I'm going to give you now is this midpoint of this. Draw that out. From here to here, midpoint. Right there. Did not break the midpoint. Send it higher. Takes out the next premium up here. So you're going to take all this other stuff off. Next premium here. Now you don't want to see this get traded through. If you're going to stay, oh, you have to include that one above you, sorry. That little fellow there. Trades through it right here. Does not give you an opportunity to get back on it. Rolls over, so you wait for the discount box to get traded through, right there. It trades through it, tags it perfectly. That's the no-go zone. Hits it, goes lower. And now we're looking for rejection block. Pay yourself at rejection block. Old low, pay yourself. Does that make sense? I'm still looking at NASDAQ and it's absolute crap still. Go back over this video because I've given you guys some freaking nuggets of information here. There's some really good stuff here. But anyway, that's my rules, and that's my way to read the market, and it's up to you guys whether or not that works for you, whether it's logical for you, whether it's consistent for you, which is what we're in here for every day, showing you the same stuff every single day. I don't change anything. I don't care if anybody else starts throwing shit at me that's not part of my setup. Good for you. Works for you. I'm happy for you. It's not my setup. It's not my cup of tea. If it doesn't fit in with my rules, I don't use it. Unless we come up with something cool like Mark 3. Then you take this stuff that I'm showing you here and incorporate that into the Mark 3. Magic. And magic, man, you get some serious payday. Tomorrow's a new day. Russell, thanks for your time. Darren, you're very welcome, man. You're welcome, Hadit. Anyway, that's the breakdown of that. Now we're inside this range here. You've already come back to a discount portion there. You want to see this close above here. Take out the bull trap. Use that as support to take the mean threshold of that candle. Once you get that, we want to see a fair value gap form above it, a graded response off the top of that for a continuation. Because if this holds and that rolls over and comes down lower, you're targeting the areas that didn't get targeted the first time. This one got targeted on the top, but its whole body never got targeted until we got through here. So that now validates this. You've got this one that didn't get hit, and you've got this one did. So my guess is if we come down, you want to see it come down into this area right here. This is what I'd be kind of looking for right there. Inside that, and then you want to see it go higher. I wouldn't want to see this start to come back and work through here. If it does, then that last little area, I guess you have to leave it there. Because even this little bottom piece didn't get filled in either. So that's still open. Otherwise, here and here, you're inside that range. And this little breaker's holding price. We have not had a body trade below here yet. So you're still inside a smaller range. And there's nothing in here to catch a run inside that smaller range. Still playing out. You still got your Model 3 back over here. Do you hold it in times like this as well, Mark? Do you hold your Mark 3 through all of this as well? That's some balls, man. Look at that. Model 4. We've added an extension, so Model 4 continuation. That's a continuation. You do. Wow. You got some balls, man. You must really trust your setup. I hold 15 minutes as my friend. So you hold the 15-minute one and you keep your fair value, or your fail is up here on 15 minutes. So when you get this model, this engine, then just leave it on 15 minutes. Your entries on a lower time frame, and then you use your lower time frames to enter, and then you switch to 15-minute, and that's your fail safe right there. So if that fails there, you're done on a close. Correct? So you just let that bounce back and forth here all day long. You don't care. As long as you get the next, you've already taken a profit at this point here. If that's your 3 a.m. candle, yesterday's 3 a.m. or today's 3 a.m. candle, and you entered in right there, you got paid at this one, and you're still waiting to go here all the time. That's not getting violated. You're saying, I'll let it keep riding. I'm aiming for the next downside target here, right? So if you're looking to target that 729, and he's not responding to me again, so you never get a quick response out of Mark. Let's see the 6 a.m. candle hold now and see that start running lower. I'm in short right here. I'm at risk free right there. Hadid's 830 here now. Send it down now, Hadid, is where I like that one. Let's go. Send it down. I'm right short off of your 830 candle. And that I'm going to move to break even. I don't want to see it revisit your 830 now, Hadid. I want to see it go. I take profits off and let some run. Good for you. Yeah. I want to see that just tear out of here now. I don't know if Hadid's still in here, but I'm using your 830 to go lower here, Hadid. This is looking like it might make a run through that first presentation. Would be nice. Don't do it. Oh, it took me out. Run. Let's go. You're here. Yeah, I took your 830 for a short there. Hello. Almost, yeah. Right off your 830 again, hey? Nope. I was hoping that would go lower, but it didn't. Getting back to that 830, not interested. Anyway, that's it for me, you guys. I'm out of here. Thanks for tuning in. I hope you got something out of that today. And thanks for everyone being here. I'm sending the love again, as usual. You guys take care. And I'll see you guys tomorrow.